Vaibhav. In today's session of Visual J Forex, we will be completing the algorithm using the indicator named iron oscillator. This is the third part, and in today's session, our focus is going to be on defining the conditions for the execution of the sale trade. So now let us go to the Visual J Forex board, which has been developed by the Lucascopy Bank SA. In the prior session, I had done the instrument subscription to make sure that the trades are only executed on GBP USD and no other instrument is touched by the algorithm. Position amount was defined at 0. Then I got these Aron oscillator blocks. The historical candles have been taken into consideration to look at the price volatility for pinpointing the entry point. These 10-second candles are going to be used, and these calculation expression blocks have been used to define the conditions to make sure that there is a minimum good enough volatility. And for that, I have defined these two conditions that the price action should be good enough. So for that, we will be looking into the closing and opening value for the last hourly candle, and we want it to be at least more than 7 pips, the difference between the candle close and open, and less than 15 pips. So there should be volatility, but not too much. And then there is open at market for the buy order after having defined these conditions. So now for this session, I will not go into the details of this, and we will now straightly head to the charting, on which I will explain to you the logic behind the execution of the sale trade. We want the Aron oscillator value to be showing that there is a substantial selling momentum. So to make sure that is the case, we want the last hour's Aron oscillator value, output value, to be at minus 100, and prior to that it should have been above minus 100. So this is the first hour. That means the momentum is getting strong, and these are initial hours. So we will have a better probability of making a profitable entry. And then we also need the last hourly candle close to be below the opening price. That means there were price losses, and as I said, the difference between the closing and opening price should be more than 7 pips, but below the 15 pips. And also, one more condition will be used, that the penultimate candle should have closed with gains. So that means that this is the first hour of the strong momentum. So that will also be helpful to make sure that we trade only when the trend is starting afresh and with due strength. So these blocks now will be joined by the sell side setup. Now we start building for the sell side, and for that, first thing we will need to do is take a couple of logical blocks, if else, and here we will want to do the comparison and the Aron oscillator value for last hour, which is Aron oscillator 16, no, sorry, 12. This should be equal to minus 100. First input equals second input, and the Aron oscillator 16, which has a look back period of 2, it should be above the minus 100. So first input greater than second input. And as I said, we also have to make sure that there is good enough price momentum. And for that, we will have to look at this actual difference. And for that, we will have to do the fresh calculation as this was for the buy trade. And also we have to define the take profit, which we will do at the end once we are done with the defining of the requirement for the execution of the sale trade. Here for the buy side, we needed the closing price to have been above the opening price, but now for the sell trade we need the closing price to be below the open price, and that means we will have to deduct the closing price from the opening price. So we will have to invert this calculation, and then that difference should be more than 7 pips. So I will have to change this. I will take two more calculation expression block for the stop loss level also. This new calculation will be needed to be done. So here we disconnect, and now candle 17 opening value will be required. So we bring in the opening price, which needs to be greater than the closing price, and here it will be A1 minus A2, and this will be actual sell side difference. And the stop loss will be simply the result after multiplying it by pip conversion factor is 10 raised to the power 4. Okay, so this will be A1 into 2, and here we will have to create a variable which should be of data type integer. So for the time being I will leave it blank, and we will create that variable whenever we bring in open at market. So for the time being we leave that as it is blank. Now this difference needs to be more than 7 pips. So here we had defined this variable and multiplied it by default instrument pip size. So we got the value 7 pips. Now we bring in another if block where we will compare this actual sell side pip difference to the upper limit. So it should be also within the defined band, and it should be below 15 pips. So again we bring in one more if block, and time first input should be less than second input. We also want that this should be the first hour of price losses. So for that we also have to take into consideration the candle 18's opening and closing value, and there the closing value should be higher than the opening value. So for that closing value and opening value comparison, pinpoint the exact entry point. I will bring in two more if blocks. So here first input greater than second input. And we need now candle 19 and candle 20's closing values, which are 10-second candles. So we take this one and compare these values to the candle 17's closing value. Candle 19 has a look back period of 1. So this is going to be the last 10-second candle and it should have closed lower than the candle 17's closing value. So first input less than second input, and then comes the open at market trading block, and this is going to be a sale order. So here default instrument GBP trade amount as usual we will keep it 0.1 million. Slippage 2 pips. Stop loss, for that the calculation has been done, but we have to now create a new variable and derive its value from this result of calculation. So I will create a new variable here. We'll name it sell side loss, and its value will be the result of the calculation, which is the actual price difference between the opening and the closing value for last hour multiplied by 10 raised to the power 4. And take profit also needs to be defined. For that we have to carry out new calculations for the sell side as well as for the buy side. We will have to do two more calculation, and then those values will be used to define these take profit orders, take profit levels. So now we need to bring in two more calculation expressions. And this is simply going to be twice of the stop loss. So pretty simple. We bring in this result of the calculation and multiply it by 2. That's it. I will create a new variable, target price multiplier 2, and this will be A1 into A2, and here also A1 into A2. This will be the sell side target profit. Okay, we will create the new variable here only. this will be buy side target price, and it's going to be this output value of the result of the calculation. Okay, so here we are done with the defining of the conditions for the execution of the sale trade. And now we will have to make sure that both the sides, the buy as well as the sell sides, are symmetrical, so that one check remains. So first let me arrange these blocks. I think we have missed out on one condition in the buy setup, and that is, I think, the condition of last hourly close, not last, penultimate one, prior to the last hour. We need to compare the candle 18's closing and opening price. Make sure that before the execution of the buy trade, that candle's closing value was below the opening price, and then in last hour only the momentum picked up. So as you can see here, there are okay, this one belongs here. Now take a look. Yes, arrow oscillator values are in place, then the actual price difference is also being compared. Candle 18's closing levels will also be looked into. I think it is symmetrical, yes. So we don't really have to do anything now, apart from the fact that we need to join these connections and then check it whether everything is going through or not. So that remains to be done. So here we are in the final stages of our algorithm, and I feel it is almost ready. At one point I thought that I had missed out on one of the conditions, as I felt one block was less on the buy side, but that was because of this block which I had taken here. Now it's all good. So with this, I hope I have been able to explain to you how you can design and develop the simple algorithms using the or an oscillator indicator, and I would suggest that you try it out on your own. You can even use this same setup if you want to, or you can carry out modifications to the extent you feel will be helpful, and then you should run it on the historical tester to see how it performs, and depending on the outcome, you can decide to use it in your trading day in day out. So that's it from my side for today's session. I hope you have been able to understand. And if you still have any queries, you can write to me in the feedback section, and I would be more than happy to take the discussion forward. See you next time. Till then, goodbye.